There we go.
I'm not. I'm going to dislike it, I think.
You would.
Good, you can't even see the dislikes anymore.
Just know it's there.
I saw your like as it came in.
I've not liked it.
Yeah, you did.
I have not. What's your YouTube? Zero?
Did Zero like his own thing?
It's just Zero Plays Trades. Let me
yeah,
I'll put the link up here for y'all so you can go.
Oh yeah, I've got you. I'm watching. Yo.
Yo.
I'm taking a dab to this. This is great.
Okay, guys. So
I'm on YouTube.
Yeah, you're famous now. So this week, guys, is going to be a hell of a week, and it can feel like it's going to get really, really scary. But as me and Realplays and Shemmy was talking about, guys, this is when money is made. When the market is volatile, you're pretty much set up. You know a lot of things are coming, so you just wait for the market's reaction, then you react and jump in your plays. With some of these coming up, you could possibly, I know a lot of y'all don't like scalping, but if you don't mind day trading, a lot of these you can probably trade like by the morning, hold it to about right after lunch, or maybe even before power hour, and then get out, because these are going to be some market moving events happening either one way or the other. Okay, so to start off, I posted in the Selene Algo Discord and the Trading Collective Discord, in public chat and the watch list, the weekly calendar. And CJ also, I don't see, it's in here somewhere, but he also did one for earnings. At the bottom you'll see a note, just kindly, it's like a quick, hey, here's what's up. But Monday, as far as the economics calendar, there's nothing happening. But as earnings, we're starting off this super earnings week with a big one. That's Square, and then Logitech, and even Infosystems. So Square and Logitech, or Square and Infosystem will be of the morning, and then Logitech's of the evening. Now, if you look at this calendar, you'll see BMO, AMC. BMO stands before market opening. AMC is after market close. And then Tuesday is where we start off the big news catalyst. We have consumer confidence, and that's exactly what it sounds like, is the consumer's confidence in the market, in the economy overall. And then we have new home sales. So last week we had a lot of stuff dealing with realty and real estate, but we got two more big events. I think it was two, before I tell you here. Yeah, so Tuesday is the beginning of it, new home sales. Both of those come in at 10 a.m. So this is where we should start seeing the shift. So Square and possibly a couple of those other ones there, earnings on Monday, those might give like a hint as things to come, and you might see things starting to kind of move that way. But I think we're still going to be trading in kind of a range up until we're going to start out Tuesday off with a bang, 10 a.m. We're going to, with the consumer confidence, we're going to start seeing things really which direction we're leaning toward. And of the morning, when it comes to earnings, we'll have Ups and McDonald's. Those are two really big ones. And then GM, GE, and Coca-Cola are like the mid-tier ones from there. And all that, like I said, is from 10 a.m. and earlier. Now, And we'll go over, I'm just going through this really quick, guys, and we'll go over some of these as far as stocks go, and we'll look at the charts. But after market close, here's where we start getting really interesting, because we have Google, Microsoft, and Visa after market close. Google, if you look at QQQ or the Spider indexes or the SPY, Google is always up there as being heavily weighted in these markets. So the NASDAQ, the SPY, really heavy weighted with Google and Microsoft. You know, I'm pretty sure Google's in the top 5, but they're definitely all within the top 10. So from there, so that's going to set us on our trend. Tuesday is. From there, arguably the next 2 days is going to be the 2 biggest days of this, at least this quarter. And that's because we have 2 big things happening, and one of them is like, well, 2 of them, both of them really big, but one of them normally wouldn't be as big as what it is right now, but because of its implications, it could make a lot of noise in the market. So we start off the morning with core durable good orders. Now, this is nothing that is super high on the list, but this will affect consumer discretionary. We have goods trades balance. Again, this is going to affect the consumer discretionary and staples market. Retail inventories. Again, it's the Walmarts, the Targets, things like that. And for real estate, we have the last one for the week is pending home sales. So you had new home sales Tuesday, pending home sales Wednesday. Now, the next 3 things are what is going to start us either shooting up or dumping really hard. And so at 2 p.m. we have the FOMC statement that comes out and the Fed interest rate decision. That's where they're going to tell us how much they're going to do the rate hikes, right? After that, at 2:30, we have the FOMC press conference. Now, what's the difference between the statement and the press conference? Well, the statement's the thing that they're going to put out there. People are going to interpret it. It's just going to be like a sheet of paper or an email. It's going to state the facts of it, why they do the rate hike, things like that. And usually, this is one of the reasons why you sometimes see things kind of wait before they take off, or you might see them jump up then jump back down. Is the press conference is when they actually come out and they talk. So when they're actually talking, they can spin it in different ways, right? But that's, you know, it's a story, right? And how they spin that is how some people, especially in the retail part of it, can react. So those 3 things is going to, like I said, either dump us or we are going to go risk on and rally from here. Now, if we're talking about earnings of the morning, we also have Shopify, Spotify, and Boeing. 3 really big ones in the market. And then after the market, we have Meta, Facebook, Ford, T-Doc, Qualcomm, Etsy, and QuantumScape. So at least 3 out of those are really big in the market. And then Thursday, and this is the one that is going to send us to 340, or everything's going to be all right. We're turning around and we're going back over 400. And this is the GDP and the GDP price index. Now, if the GDP quarter over quarter comes in negative this time around, this is the official start of the recession, right? And the only way that this can be spun in a good light is if, yeah, it's negative, but it's less than what, or I guess in this case more than what the last negative come in at. So they can say, yeah, it's negative and technically we're in a recession, but it's getting better. We've hit the peak and we're coming back down the hill. So they could possibly spin it like that, but that still goes to say that we are officially in a recession. Now, we heard a couple of weeks ago that the Atlanta Fed said that they can already put us in a recession with their numbers. So I think it's a given that we are going to get a negative GDP. I think that's a no question. So the real questions in these two is how negative is it compared to the last negative GDP and the estimates gave down, and what is that Fed rate hike going to be? Now, best case scenario is that it comes in at 0.75. If you're a bull, the best case scenario is 0.75. The worst case scenario is over 1.0, 1 point. And the reason why I did it like this is because the mid here is 1 point, right? 1.0. And the question is what happens if it comes in at 1.0? Me, personally, I think the way the Fed's been acting, like they've been trying to back away from that 1.0 number when they originally said, oh yeah, we're probably definitely doing a full point. Now they're kind of saying, they ain't come out and actually said it, but they're kind of wanting us to think that, oh no, we're going to do a 0.75. So I think a lot of the market started out expecting a full point that now are sitting at that we're probably going to get that 0.75 because they believe that we found the bottom of the market and the only way is up from here. So in my opinion, if it comes in at that full point, we're going down. But again, it really all depends on how they spin it and what people's expectations are. They could look at that 1 point and say, oh yeah, it's priced in, no big deal. We'll wait and see what GDP is. So, it's all about these interpretations, but I believe that if GDP is negative again at 1.5 or higher, and the Fed rate hike is a full point or higher, then by Friday we'll be sitting at 340, maybe Monday, and that's pretty. I mean, it's a $40 drop in 2 or 3 days. So as far as earnings on Thursday go, we have Tilray, we have Pfizer, Valero, MasterCard, Southwest, and Hertz. Now, I know that MasterCard and Hertz are very large cap, and Pfizer and Southwest are within that large to mid range. But the real big one, the one that, and that's what I'm saying, guys, this is just compounding with things that can go really wrong or really good here. After market close on Thursday is Amazon and Apple. These two are the most weighted on the S&P and the NASDAQ. Sometimes Tesla will slip into that second spot on NASDAQ, but overall, these two are really going to move the market depending on how they come in. Apple, I'm kind of bullish on Apple, but Amazon, I think we may see a pullback in Amazon. And then you also have Intel. And then Friday, after all this shit show of a week, or possible, or maybe it's a glorious week, who knows. After all of it, things has calmed down. There's no more with the economic calendar. And the earnings that we have are mostly oil. And we have ExxonMobil, Chevron, I think that's Phillips 66. And then the outlier is AstraZeneca. Again, these are things that are going to move, especially their sector. If you look at the energy sector, XLE, Exxon is the most heavily weighted in that sector. So, again, things that can really move this market. So, now that I have spit that out quicker than the Matchbox guy on the old commercials, remember that, where he just goes off 90 miles a minute? Is there any questions before we start looking at any charts? Is there anything anybody would either like to add or have a question about or anything like that? Okay.
Beautifully spoken.
Thank you, Monkey Man.
I got you, Zero Plays.
Except for my boy Blue. Right, and CJ said the rest of the releases for the month can be found here, and he posted a link. So you got that link there for other events and stuff for the rest of the month that you can see there. I also post these calendars weekly, but if you want to look ahead, that's the way to do it. And CJ posted a earnings list, some of the ones that he's watching and stuff like that, in the watch list too, I think is where it's at. So with that being said, I know Shemmy may have one or two, I can't remember, and then Realplayz can either mention ones he's got or run them down or whatever he wants to do with his there. But for me, mainly this week, I'm going to be watching the markets and the really big earnings. So if we're talking about like, I get, you know, for me, the SPY is going to be really big this week. I'm not going to keep my off of it this week. You know, I usually trade SPY anyways, but this week is going to be really big. And like I said, some of these plays, even if I know a lot of y'all's not into scalping, and a lot of the plays I call out in live trading is scalping, or at least very quick day trades. These are the type of things that you can swing, at least for the full day, or most of the day, if not until the next day or something, depending on what it looks like. Maybe you pick up 5 at the start, you sell at key areas, and you hold 1 overnight, something like that. And in that area, what I want to look at, it's probably best off if I just write this down and go on like that, is of course SPY, that's a given. We'll go over that. Amazon.
I think Tesla will be interesting this week.
Yes, Tesla. And Apple.
Apple. Mm-hmm.
So those are like, and maybe Microsoft in there.
Yeah.
So those are the ones that these could possibly be like, even if you're not the type to play earnings, these, with this type of news coming on, these are the type of plays that you can swing up to earnings, do things like that. And we'll run those down. Some of the others I'm interested in is Square. That's Monday. We'll try to do these in order here. GM. Ups. Google. Google could probably be put over on those, that list I said that would probably be really good overall marketplace. What else do we have here? I know some of y'all like Shop, so we're going to take a look at Shop too. Boeing. Meta. Ford. I know some of y'all like Etsy too, so we're going to look at that. Hertz. PFE. We'll put that on the maybe list. And ExxonMobil, but really oil in general. Alright, so with that being said, let me pull this up. And so I've already got my chart up, don't I? Okay. And then another one I want to look at with it. Okay, guys, the Dixie, I don't know if many of y'all know the Dixie. That is the dollar index. This is starting to get really important because of how high it was. And usually the higher this goes, the lower the market goes. People are putting their money back into the dollar instead of stocks. But with this backing off and coming up on these key levels, if we put this in a bubble and we take off the events happening and we just look at the Dixie as it stands to the SPY, this coming down, and along with the next one we're going to look at the VIX, are really important to us. As the Dixie comes down, the overall markets should go back up. People taking their money back out of the dollar, putting it back into the markets and bonds and things like that. I was watching something earlier today that it was even talking about the 2-year yield is even pulling back and doing some things like that too. I think he had the 2-year versus 10-year and was looking at the crossing. So the 200 especially for the Dixie would really, that's around 105.84, is really important. If we get under that, look for this to really probably shoot down and people start taking their profits from it. But you see this, if I can pull this up and show you this line right here, that's what we really need to break and stay under it. In my opinion, for us to really start pulling back, the profits takers to really come in and say, you know what, it's time to switch our money back over to equities and bonds, all that stuff. So the VIX too, let's pull back out here and look at today. We are coming way back down in the VIX too. I know if y'all are in the live trading session, you hear me say a lot, I don't like to swing trade when the VIX is over 20. And I will take some swing trades under 25, but I don't go looking out for a lot of swing trades until it's under 20. And we're currently sitting at 23 right now. We've actually kind of broken this shelf here at the 200 in the previous swing low. So it'd be really nice if we could get back down to 20 and under. That's really going to depend on the GDP and the FOMC Wednesday and Thursday. But if we get the VIX back under 20, that's when the markets will really go with risk on. If you look at things like, like this last little rally we had, if you look back at the sectors, what was doing the best good, it was growth stocks during that time. And that's mainly because the last couple of rallies, tech and growth kind of go hand in hand now, but energy and a lot of that ran up. And it's already high. It pulled back some, but growth really sold off. I mean, look at Kathy Woods. RK is plummeted because growth stocks are down. So we really seen the kind of resurgence in some of those growth stocks this last little run up last week or two. So we possibly could really start looking at some of these growth stocks to really kick in and go with the VIX under 20, and from there, that's when you're going to start seeing more of the penny stocks, the pharmaceutical, or the bio and growth stocks really boom, really take off. They are drowned out, they're plummeted, and they're really undervalued even for growth stocks. So those are two key things to watch. It's the Dixie, the VIX. They're going to really kind of give you an idea of the overall markets. But as we're looking in SPY, even though we have these rallies and dips, we've traded. Sorry about all these lines in here, guys. We're still trading within this kind of, you know what, I want to kind of range here. We are trending upwards slightly, but still trading within this range. And in my opinion, a lot of that has to do with this big news coming out. You know, the market's still kind of holding out and waiting, seeing what's going on. And that's the reason why we've seen so many sector rotations within this. You know, you pump up one sector, you get out of it, you rotate to the next. And you kind of just trade sideways for a bit. The fib line on this is back at 382. So that could be within normal trading range up until Wednesday when we start getting some of this bigger news. So if you see a sell off to that, I wouldn't worry as much. That still puts us within this range. That still puts us, that's not to say that, oh, well, it's selling off, the market's doomed, they know ahead of time, we might as well get puts here and out. You know, that's still trading within that normal range. The real breakouts would be if we pretty much on this end over that 400. So really you're looking at about 398, 399. But the 400's the real breakout spot there. On the low end, we're looking a breakout below this fib, which is also the nearest little bitty swing low. I mean, this is the better pivot point, but a break below that would make me think that it's pulling on back. Because you know, you have a break of the fib, you have a break of a swing low, and you're below the 50 and the 200 there also. I'm going to post some new levels and stuff here too. Apple is 90% of the time hand in hand with the SPY. I mean, what you just seen there is pretty much the same thing. There's a little bit more movement in it, and it's in more of an uptrend, but that's still that same trading range. And you can play the you can play Apple along with the SPY for the most part. You will see some divergence. I don't want to say it's exactly 1-to-1, but for the most part, at least the trend is within that. The overall trend is with the SPY. Amazon has been the outlier here lately, even though it is second or third on the overall list. We've seen it really more coil, a little bit more tighter, and you can see that it's got less of an uptrend than the SPY does, and we've had kind of wilder swings. You know, they're more top to bottom instead of kind of stair stepping their way down. This one, I like that about this, because when it does take off, it takes off. You know, you're not down a little bit, then up, then down a little bit, then up, and down a little bit and up while you're swinging it. It is usually straight. There is some days it does follow the SPY, but overall, when it chooses a direction, it goes in that direction. So Tesla had decent earnings last week. but we've yet, on the day chart here, we've yet to break over the 200. I do think with that earnings last week, it has put us on, again, let me get rid of some of these lines. You know what, I need to redo all these lines anyway, so. I do think with that earnings, it's put us in more of a bullish trend, and you can kind of see that right here if I draw. So you can see how we kind of broke out of that. We was trending kind of like sideways, coiling, kind of hovering around the 20 and the 50, and then we finally broke out. But we're showing resistance at the 200. What I would look for in this situation is to see if we get a pullback to this trend, which is also would be turning this previous resistance into support, and then take off from there like that, you know. Probably steeper than that, but you get my drift. You want to come down and then go up like that from there. If we come back and we break back below this, look for it to possibly come back down, test this trend here, and then wait for your next breakout. And I'm going to say Google's pretty much the same. The only outlier besides Tesla and these overall market ones is probably Microsoft. I've not traded in a while, so I don't know how it's been trading. Again, we've got this coiling effect here on the 4 hour. Probably see it better on the day. Nah, seeing it better on the 4. So again, you can see how these are all like they've been waiting on some type of news. They're kind of undecided, but still kind of trading within a range. But again, we've yet to break over the 200. So overall, we're, you know, even though we have, let me grab it here. What do I do with it? Even though we have this slight little flag right here. If we pull out and look, we are our overall trend.
How the hell do you see with them?
You turn it off.
There you go.
Yeah, that I've got that on scalping, so it's only good on the smaller time frames.
Okay.
But yeah, there we go. So overall, we're still trending downward. Now, what it looks like to me, though, get past all that. No, let's just get rid of these. It's like we are starting to coil up. We are starting to find a bottom. But again, I think that's going to be on this news. See how we're trending down and we're kind of starting to flatten out a little bit. Even though we do have this lower low here, we've really kind of starting to form a base. Let's put this in a box. Really starting to kind of form a base right in here. That doesn't mean we can't break below it. We broke below it right here too. But this does give you kind of hope, depending on what kind of news it goes, that it could turn around and go bullish. When you've even got some like a crackhead head and inverse head and shoulders right here. But overall, I think with a lot of these markets, you can go with the trend, you can go with the overall flow, but really watch Wednesday and Thursday on how they react. You know, with this type of stuff, you wait and see how the market reacts, then you react accordingly. Don't FOMO in. If you miss your entry, just wait for the next entry. But see how the market reacts. Oil now. I'm kind of bearish on oil right now. I do think I do think that we are going to start seeing it trading within these trend lines, but overall, I think we are going to pull on back, and I can show you why right here. I just want to take, God, see, I've got too much stuff in here right now. So you can see that we was kind of, these blue lines, we was kind of in this sideways trend for quite a while. I mean, we're on the day chart here. So since March, when it reached its peak, we've kind of been in this sideways trend with almost a double top happening right here. But we've been in this trend down. We've yet to break out of it. And we are right, I mean, technically we did get a close below it if you zoom in, but we're right here. The better close would be right here at 92, say 92.75. That would be the confirmation of it pulling on back. But I do think we will see it stair step its way down. But overall, I think we are trending back down to lower levels. Sorry, I lose my voice a little bit. Possibly, I don't think we're going to see back to normal prices, but I could see us trading within a 79 to 95-ish range, maybe 85 to 95, something like that. And you can see this in Exxon too. It's trending down. We've yet to break under the 200, but to be honest with you, I don't know if we will break under the 200 this go around. We probably would come down and touch it, pop back up a little bit before we do, but Exxon, its normal trading range is from the low 60s to about the mid 70s, or at least that's what it was before the Ukraine stuff and all that happened. That's where I think it's most comfortable at. That's where it's kind of mid normalities at range. So that's where I expect this to go back closer to the like 70-ish, 75 range, its first sell-off, and then probably trade within a range from there. If that makes sense. Trying to think, what else we got. Is there any stocks anybody would like me to look at or go over or anything?
Visa and UPS, please?
Yes.
Thanks.
I like this effect when it sells off and we get this kind of cup shape, this reverse J. That's when what you're seeing the sell off. I've heard it referred to as the 3 stages of reversal. You have the sell off, the consolidation, then the reversal itself, and that's where we're at right now. We're in that consolidation, heading toward the breakout, the actual reversal. Let me take selling off here real quick. We'll just leave the ultimate support and resistance on. Come to the 4 hour, we can probably see this a little bit closer. So you can see we had to sell off, now we're kind of consolidating within this range. Really, even though we've had a breakout or two, that's the real range, right? The bottom range right there. Even though we have had these 2 breakouts. And the trend back up. Yeah, you could really call that ascending triangle. But that's kind of your range right there. For me, I think ups kind of looks good, and you might see a bullish run into earnings, which was, what day was it? Was it Tuesday? Wednesday? Go back here. So ups is Tuesday before market open. So you might see a little bit of a bullish run into earnings. From there, it's really up to you if you play it in the earnings. Most earnings are lottos, but what I would expect this to do from here, where we do have these indecision candles right at this peak. Let me find my drawing tool. Is for this to pull back to either the 20 and take off, or pull back to, depending on how this moves, we might see the 50 be above the 200 or right there at it, regardless, to right around that 200, the 50, and bounce. Anything other than that, I would wait for the next setup, because I believe what would happen if it breaks that 50 is we would pull on back on our trend and keep trading with that trend until we break out. But that's what I would look at. If we get, mainly just because of the indecision candles, I mean, it's possible it could take off from here and you could enter there. But let's look at the hour. 15. Get rid of that. There we go. That's what I'm looking for. Yeah, it's possible from looking at this, it's kind of got like a double bottom, that we could just take on off from here. But yeah, just the way that those candles look more undecidedly, I think we would possibly, if we was looking at this, see a pullback to around the 50 maybe, or what I could see it doing where we have this line here is it either taking there and bouncing off, or trading a little bit and then taking off at earnings, or a pull back to the 50 and take off. So really, if I was going to pick an entry point for this, it would be one of two things. It would be the pullback to this line or the 50 and a clear bounce. And how can you confirm a bounce? Well, you can do that with an engulfing candle. That 3-bar play I talk about, like the green, red, green, or green, red, red, green, where the two outer ones encapsulate the two inner ones. I know, Barry, some people might not know what I'm talking about, but I know you've heard me mention that before. But that's how you can confirm a bounce, something like an engulfing candle, some type of candle pattern like that. Or the other entry point would be if it broke out of this white line, and you could do it within a range, like from that white line to that wick right there, and say, well, if we get a breakout of this box, then that'd be my entry point. I'd jump in. I'd set my stop loss at, see, that would be 108. So if I was in shares, I would set my stop loss probably around 186.16. If I was in options, I would probably set it at, depending on what your delta is, Like if you go really close to the money, where it's around like the $40 range, I'd probably set it at about I don't know, 60 cents to $1 lower than your entry point. It really depends on what your delta is and what you're willing to risk, because if this breaks out, you're probably looking at see, that right there would be close to 2. Yeah, you're probably looking at least 2 delta cycles, maybe 3, depending on if you play it for earnings or not. But yeah, that's the way I'd either look for the breakout above this or that bounce with confirmation and jump in. The other one was, what was the other one again, Bear?
Visa?
Visa, that's it. Now, I think I'm really curious to see what financials do this week, because they did pretty decent with Citigroup. Wells Fargo had a bad earnings and still popped up. So we have Visa and MasterCard this week. Really, right now, I think this looks a little bit bearish. Mainly where it popped underneath the, we're looking at the 1 hour, where it popped underneath VWAP, and now it looks like it's rejecting under VWAP. Here we go. So you can see how it pulled up back to VWAP, now it's rejecting under it. I would like to have seen that rejection fall under the green 50-day EMA, but it hasn't. As a matter of fact, we've got just a slight green line right here. So, yeah, this one's rough. If you see in the pre-market that it pops back over VWAP and shows a reason that's going to stay above VWAP, like it turns it into support, or it takes off with a lot of volume, those type of things, then I would probably be bullish on it, because we are in the uptrend. Yeah, we're in the uptrend, would be above the 50, and that could just be another bounce off the 50 like it's done in these cases. What you have to worry about is the times that it pulls back to the 200, like in this case. So if we get that clear rejection of VWAP, and let's say it breaks under this swing low right here, which is pretty much at the bottom of that green box on the 1 hour, so around 211.62. If we get the break underneath that, we're pulling on back to the 200. I would about guarantee it. But if we get a lot of volume in the morning and this pops back over the 20 moving average and or VWAP, depending on whichever you want to go by, I think in the morning VWAP probably is not going to be a good judge. So I would go with the 20 EMA if I was you. But if it was to pop back over that, and like I said, either confirm it as support, like with a pullback and a bounce, or if you had just like a lot of volume coming in, yeah, that's pretty much it. That's what I would look. But as of right now, just looking at it, it looks a little bearish to me. I could see, even though we are in the uptrend, I could see this possibly pulling back to the 200. And if you look back, it shows that it has done things like this. Like we get a little bit of run where it runs to 50, then it pulls back. Same thing, even like underneath, runs a little bit, then pulls back, runs a little bit. So it looks like with Visa, you have kind of these bursts of momentums, then pullbacks, bursts of momentum. Yeah, that's the way I'd play that one. I would be watching to see if a lot of volume comes in the pre-market, or if we break below 211.62.
Thank you.
Is there anything else anybody would like to look at? If not, Shemmy, was there a couple that you wanted to go over? Or did you have anything you wanted to add?
I was just gonna not really about Spy and Tesla. I don't really have any charts on them at the moment, so I need to chart them still. But just a few like short squeeze plays. I'm about to send like a watch list in.
Okay, is that the one you tweeted out earlier?
Yeah. I don't really have nothing to add other than Tesla looks like, well, alt market looks like we could pull back a bit.
You mentioned those short plays, and there's a couple here that I'm going to send you to.
Okay.
But I like the one that you had B had. The short interest on that's still really nice. Big.
And Rev. Look at Rev.
Oh yeah, I seen Rev was on there too. Yeah, I seen it.
Yeah, Rev's still highly insanely short. So.
And did you see Big as in Big Lots?
No.
So let me make sure I'm giving you the right numbers here.
Oh, you did send me. Did you?
I think I did.
Yeah, I remember actually looking at it.
So it's got like possibly over 30-35% percentage of float shorted. Short interest is over 10 million, and the daily volumes here lately has been over 1 million to 1.5 million. They are 7 days to cover. That means if the shorts want to cover with the volume that it is right now, it'd take them 7 days to do that. That's a lot of short squeezing if it decides to do it.
Yeah. Wow.
So that's one to keep on there. And you mentioned Rev.
Yep, Rev. I ain't looked at. I need to. Yeah, I'll send some charts out there probably.
Yeah, I've got a couple more. I'll send you. I'll DM you, and that way you can look at them. If you like them, you can add them. If not, then oh well. You probably know more about the short stuff than me by now. Realplays, are you around?
What's up?
I think he's drinking. No, is it?
Did you want to go over any of yours or mention your stuff on Twitter or anything?
Yeah, I mean, I got my, got a couple tweets out. I'm watching Amazon, IWN, BHAT, Shop, Apple, BAC, Coca-Cola, MRK, and BFYI.
Wait, what was that last one again?
BFRI.
BFRI. Yeah, dang, man, what happened to Internet After Hours?
No, man, it popped off.
I'll have to put that on there and watch it too. Guys, y'all listening? It's at Realplays is your Twitter, right?
Yeah, Realplays 007.
Okay, at Realplays 007. Guys, go check out his Twitter. He's constantly posting plays, decent charts. I mean, it's all really nice setup, explained. He's usually got some really good plays, and it's worth checking out. Yeah, definitely a lot better than Shemmy's. Are you there? I was wondering if you're still sleeping on.
I agree.
No, Shemmy's doing good. I can't. Man, when's the videos coming out? When you dropping the videos?
I got a little.
You got in your own head, didn't you? You started thinking about it. Oh man, I've got to change this and do this.
Yeah.
Yeah. Just
It'll be out.
Yeah, put it out, man. Wait till you hear mine that's coming out to this evening. You're gonna be like, "Dang, that's a piece of crap," and I'm worried about mine. But yeah, guys, if that's what everybody has, and nobody has any other questions, I guess we can wrap this up. So let me go again and say, the calendars are in the watch list, and I also posted them to the public chat in the Trading Collective Discord. Also, I'll have out my state of the market and my trading tool video out this evening. So the state of the market is pretty much a lot of what we just went over, kind of just distilled down in an edited video. This video, if y'all want to come back to it, It'll be on YouTube too. I'll post a link down below. Trying to think of anything else. I guess that's it. You know, make sure to go check out the Trading Collective Twitter, Shemmy Realplayz. Mine is W Trades, DUBYA Trades. The Selene Algo. A lot of these levels and stuff I post get reposted there. I guess that's it, man. You know, if you're watching on YouTube, hit that like and subscribe button. It really helps out with the algorithms and getting really seen. Is there anything anybody else wants to add?
Nope. Other than just big earnings week, so just trade careful.
That really is the key here, guys. This is where a lot of money can be made if you're smart about it all. Just really, really smart. Let me check this out right here 1 second. Okay, so that gets answered. Yeah, we already answered that. So, okay, I was just making sure. Looking on YouTube at the comments. Just asking what commodities or stocks do you think you should focus on. I really think the overall market stuff, you know. If you really wanted to focus in on stuff, it would be the SPY, Apple, Amazon, Tesla, Microsoft, and Google. You know, you cannot find out of that list. I mean, if you can't find a good stock worth trading, then you really need to think about what it is you want to trade, because those stocks move. They're easy to keep up with, especially with the overall market, the flow. They are good with options too. I mean, most of these, when they move a couple of dollars at a time, which allow you to get a couple of delta cycles out of your options. But yeah, I think that's about it. So if that's the end of it, I'm gonna go ahead and hold on. There's another one here. Why can't I see that so good, man? Every time. Yes, so let's do RTK real quick, or RKT, sorry, RKT. Let's get rid of VWAP, make it easier to look at here. RKT. So overall, we're in a downtrend under the 200 since May 2021. We have had these pops up to the 50, but it looks like it hasn't held. This actually, what we're in right now, has probably been the best pop over the 50, because we popped up, consolidated out it, and then popped again. So actually right now it probably looks its best, and it's probably because a couple of things happened. One, it is really beaten down, like really low. It wouldn't surprise me with this one if it had a high short interest. It's been beaten down so much. And then last week we had a lot of things dealing with real estate come in. I'd have to get out my notebook to tell you exactly what they were, but so it could continue to do okay this week too, because we have new home sales and pending home sales numbers coming out. So as far as the fundamentals or news catalysts or that end of it goes, there's a lot that you could probably look forward to with Rocket. But on the technicals, we did have this sell-off here, it looks like. That doesn't worry me as bad because everything had a big sell-off. Okay, just looking at that one. Had a big sell-off Friday, but we did get a close below the 50. I guess you could, let me put this in a box right here. Within that, to about that. That's really kind of the range of like the last ditch hope. If it breaks below this, it's probably going to pull on back like we was looking at on the day chart here. That's when you're probably going to see this pull back, back under the 50. Or at least a retest of it, if not under. Probably a retest. But where you may get lucky is come Tuesday, the new home sales come in. It'd be really good news for it, and you could see it take off. We are, or well, was in a steep uptrend. Usually, this is going to be very close to like a rising wedge. I'm going to put it. Really, I probably should do it like this. That would probably be a little bit more accurate. No, I don't like that. Yeah, see, it's kind of in this rising wedge and broke out. So this could just be like a relief pullback. It does concern me a little bit where it's under the 50-day. Well, not only is it under, it closed under. It didn't just wig down. But you are coming up on support. So what I would look out for is for it to do something like this. If it comes down anywhere within this box, bounce, and take off. Probably what you see is a bounce here, a bounce back on the 50, and then a takeoff. Maybe even forming something like a really mini head and shoulders type deal, where we have the shoulder here, a head, another shoulder, then a bounce. But if we get the break below that, where it does something like that, then look for it to retest the upper to mid $8 range, possibly even lower, but at least that range. Let me see if there's any other questions on YouTube real quick. But yeah, I hope that answered your question. But yeah, with that being said, if everything else is the same, I'm going to go ahead and jump off of YouTube. Guys, if you appreciate what I'm doing, hit that like and subscribe button. And check me out on Twitter at WTrades, that's DUBYA Trades. And check us out at the Trading Collective Discord. There's a link in the description down below. There's also a Patreon. And the algo and stuff that you see me use today, all that, there's a link in the description. Guys, you have a great day. Appreciate you coming out and hanging.